Happy Wednesday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. And first up, we have some rather concerning news to cover. As we have been anticipating for the last few days, a People's Liberation Army military exercise is now underway around Taiwan. While we have seen Beijing engaging in drills around Taiwan in recent years, this current exercise represents a significant escalation. There are two reasons why. One, the PRC did not announce the exercise in advance, as it has done in the past. And two, the size is massive. Taiwan officials say the size of the naval component alone is the largest in almost 30 years. As of Tuesday morning local time, nearly 100 Chinese warships and vessels involving several thousand troops were spotted across the South China Sea, in the waters surrounding Japan and South Korea, and around Taiwan, according to Taiwanese security officials. Taiwanese media reports that this is likely the first time such a large-scale maritime operation has involved multiple Chinese theater commands and its Coast Guard. Speaking in Taipei, a Defense Ministry spokesperson said China's Navy is building two walls in the Pacific, one at the eastern end of Taiwan's Air Defense Identification Zone, and the other further out in the Pacific, expressing, quote, "They are sending a very simple message with these two walls, trying to make the Taiwan Strait an internal sea," end quote. Adding that Russian ships were spotted near Japan and South Korea too. The exercises come in the wake of President William Leichtender's recent visit to Hawaii and the US territory of Guam, which we covered at the time. Taiwanese military officials said the large-scale maritime presence is not only China training to enforce a blockade on Taiwan, but also an effort to implement a strategy to prevent other militaries from coming to Taiwan's aid. Such operations also included practicing the interception of international sea lanes and attacking foreign convoys. The size of the military drills, the potential involvement of Russian military assets, the expanding conflict in Europe and the Middle East, all point to a very concerning trend. We will continue to follow this space very closely. Next up, we move to the Chinese economy, but just quickly, I have a piece of housekeeping I wanted to quickly deal with. Recently, sadly, and regrettably, there have been several high-profile hackings of YouTubers in the space, geopolitics, particularly those focused on places like Russia and China. This is, of course, very devastating to any creator involved. This is not only their creative outlet, but also their livelihood. My thoughts go out to those who are involved. Of course, with the content that I produce here on China Update, I am also a target of state-sponsored hackers. In the event that the channel was to be shut down, I would still continue producing these episodes. Hopefully that does not happen, but if it does happen, I need to be able to communicate to you, the regular audience, where to go to continue watching new episodes if you want to continue following China Update. What I would do would be to send out an announcement and links for where to go and instructions of where to go on my X account. You can follow me on X. The link is in the description below. Or on my Patreon. You can also sign up to Patreon for free. You don't actually have to be giving anything to be following me on Patreon. So if you'd like to keep following the channel in the event, which hopefully does not happen, that something happens to this channel, I would use those platforms to communicate. I would recommend going to those links and following just in case. Whatever happens, I will be doing my best to continue doing these episodes every day, covering what needs to be covered, no matter what the threats and risks are. Now, just quickly, since we're doing housekeeping, if you're getting some value from today's episode and you'd like to see the channel grow, liking, sharing, and subscribing is a tremendous help. Patreon and Buy Me a Coffee links are also in the description for those who want to help keep the channel financially sustainable. Thank you so much. Now let's continue with the economy. Yesterday, Tuesday, the General Administration of Customs Bureau published the official trade numbers for November. These were once again very disappointing. Economists surveyed by US-based The Wall Street Journal had anticipated that exports would increase 8.4% in November. Bloomberg had expected a 9% increase. This was in large part due to the expectation that the threat of sharper higher tariffs posed by the incoming Trump administration would trigger a surge in front-loading of Chinese goods. However, the growth slowed to just 6.7% year-on-year. More concerningly, the flow of goods into China declined further, with imports down 3.9% from a year earlier in November versus a 2.3% drop in October. This is the largest contraction since February, when the country was on holiday for the Lunar New Year, and the sharpest drop month-on-month in 14 months. Economists had expected growth of 0.8% for last month. The unexpected drop in Chinese imports shows just how weak domestic demand is. Speaking on the numbers, Peking University Professor of Finance Michael Pettis observed today, quote, "It's great that economists and policymakers in Beijing are all discussing how important stronger consumption is to China's economy. But this still isn't showing up anywhere, not in the inflation data, and certainly not in the trade data." End quote. Meanwhile, while we're on the economy, yesterday we discussed how on Monday the Politburo made a huge announcement about greater support for the economy. In response, the Chinese stock markets opened up strong on Tuesday, but then gave back most of their gains. As veteran China analyst Bill Bishop observed today, quote, "As positive as the Politburo meeting readout may sound, and as hard as the propaganda organs and sell-side talk it up, there is still a lot of caution about how much of the rhetoric will be supported by substantive policies. The Central Economic Work Conference readout is not likely to have much more detail, so those waiting for actual numbers may remain disappointed. But it seems clear there has been a real shift at the top in thinking about the challenges in the economy, as well as the realization that the external environment may materially deteriorate soon, and so they need to be ready to respond." End quote. The Central Economic Work Conference is likely underway, or about to start, and we will cover the readout once it's released. At the moment, what we are seeing is basically speculation from economists. US-based Bloomberg, in a piece looking at polling of economists and brokerages, reports that China may raise its budget deficit to the highest in 3 decades and make the deepest interest rate cuts since 2015, quote, "following the boldest stimulus signals from its top leaders in years." End quote. At least 7 Chinese brokerages out of 10 forecast that next year's fiscal deficit target could reach 4% of gross domestic product, the widest since a major tax reform in 1994. Beijing has historically kept its budget deficit ratio at or below 3%. 6 of the brokerages expect policy rate cuts of 40 to 60 basis points next year, echoing earlier predictions from several foreign banks. Now, it is worth noting that the previous so-called prudent stance that the central bank had held for the past 14 years coincided with overall debt, including that of governments, households, and companies, jumping more than 5 times, even though gross domestic product expanded only roughly 3 times over the same period. So, if that was prudent, what does loose mean? Shuang Ding, the chief economist for Greater China and North Asia at Standard Chartered, tongue-in-cheekly expressed on this point yesterday, quote, "From prudent to moderately loose is a big change. It leaves a lot of room for imagination." End quote. Next up, and finally for today, we move to developments in the fast-moving tit-for-tat world of US-China technology competition. This week, China's State Administration for Market Regulation launched an anti-monopoly investigation into Nvidia Corporation, citing potential breaches of the anti-monopoly law of the People's Republic of China. This move centers on Nvidia's 2020 acquisition of Mellanox Technologies, a deal previously approved by China under restrictive conditions. The investigation raises concerns about whether Nvidia's actions have unfairly restricted competition in key markets such as GPU accelerators and high-speed networking equipment. This investigation comes amid growing tensions between the US and China over semiconductor export controls. The US government has imposed restrictions on the sale of Nvidia's advanced AI chips to China, citing national security concerns. We've covered all of these, of course, the most recent update coming just a few weeks ago. These restrictions have limited Chinese firms' access to cutting-edge technology, making Nvidia's products even more strategic for the Chinese market, which accounts for about 15% of the company's revenue. Analysts suggest this investigation may be a political response to US policies, similar to the potential cybersecurity review facing Intel. While Nvidia's leverage appears limited, any imposed remedies could impact its strategic business operations. The timing of this announcement, Monday, coincided with a Politburo meeting focused on stabilizing foreign trade, so the move may further undermine investor confidence. Meanwhile, US-based Bloomberg reports yesterday that manufacturers in China recently began limiting sales to the US and Europe of key components used to build unmanned aerial vehicles. The outlet writes that the moves are a prelude to broader export restrictions on drone parts that Western officials expect Beijing to enforce in the new year. Those rules could take the form of license approvals based on the intended use of the components, or softer requirements for Chinese companies to notify the government of their shipment plans, according to one of the unnamed sources. The limits on shipments of drone components have impacted both US and European companies, according to these unnamed sources. Chinese producers of motors, batteries, and flight controllers have capped the quantities they deliver or stopped shipments altogether, they added. On this development, we quote, once again, veteran China analyst Bill Bishop, who today expressed, quote, "I understand the desire to fight back on foreign sanctions and export controls, but this will just accelerate strategic decoupling, just as the recent restrictions on exports of some critical minerals will. It will not be easy, it will not be cheap, but these moves may finally be a tipping point for US defense firms and the US government to dramatically intensify their efforts to de-PRC their critical supply chains. And with some of the advisors around Trump coming from the venture capital world, with significant exposure to military industrial investments, expect them to be pushing very hard for this kind of decoupling. End quote. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Wednesday, and I will see you all tomorrow.